Dear investor, Edelweiss Private Wealth Management is pleased to present you the latest issue of Investment Strategy Report for February 2017. Let's take a look at key highlights of January and Union Budget 2017-18. The Union Budget has delivered a dose of credible growth spur. The government finances, which have been improving steadily over the last 3 years, in conjunction with buoyant tax collections, provided the much-needed room for spending where it matters. The fiscal path chosen by targeting fiscal deficit at 3.2% seems prudent. More than 2% of fiscal consolidation over the last 3 years has given the government room to prop up demand through focused spending. A 24% increase in rural and allied sectors and a 25.4% increase in capital expenditure highlight the quality of spending. A quasi-stimulus for consumption through cut in tax rates for individuals, MSME, reduction in holding period for LTCG on land and property would provide rebound in consumption. A few areas of concerns, like changes in the long-term capital gains tax on securities and indirect transfer provision for FPIs, turned out favorably for markets. Budget 2017 has continued the government's efforts to keep the exercise of Union Budget linked to its ongoing reforms agenda whilst abstaining from any surprises. Globally, the Bank of Japan raised its economic growth forecasts but kept its policy rates unchanged as was widely expected. The US Federal Reserve ruled unanimously to keep its benchmark interest rate unchanged in a range of 0.5% to 0.75%. Donald Trump was sworn in as the 45th US President as he vowed to rebuild the country. We believe that the stock markets would perceive this budget positively, given the adherence to a stable fiscal path, focus towards targeted spending, absence of any changes to LTCG, and exemption of FPIs from indirect transfer provision. We remain bullish on equities over the medium term. Outcome of few critical global events needs to be seen, such as Donald Trump's policies and elections in Germany and France over 2017. We recommend investors to deploy in a staggered manner and invest 40% of fresh equity allocation till Nifty level of 8,800. Bond markets are expected to remain stable based on lower government borrowing, healthy revenue accretion, and no changes in subsidies. This would also keep the rupee supported for the short term. The next few triggers or guiding factors for the markets are likely to be the US fiscal and foreign policy and the US Fed's monetary policy guidance. We continue to recommend investors to allocate 100% of their fresh fixed income allocation to accrual strategies. Investors who have tactically allocated to duration strategies post-demonetization should continue to hold on to their positions, as we believe that yields are structurally headed lower. Edelweiss is the proud sponsor of the 2016 Indian Olympic team. Also, Edelweiss Tokyo Life Insurance has given a Rs 1 crore life insurance cover to every athlete of the 2016 Indian Olympic team.